Hello friends, welcome to my channel Fintech Logics. So today our topic of discussion is one-time payment, how it works, and specifically we are talking about borrower initiated payments here. So we have talked about lender initiated payments, and now we are talking about borrower initiated payments. So if you have not seen my earlier videos on the different payment need and the payment methods, please, I'll provide the link here, please have a look. So what are the use cases for borrower initiated payments? So typically these are ad hoc prepayments that are to be done by the borrower to lender or the foreclosure. So it can be either a partial amount or a full amount. Now we have to understand here that why I'm categorizing that as a different types of payment is because for these payments there are no dues generated. These are purely based on borrower's will. Whenever borrower is comfortable to make any payment, they would do this kind of payment. So what are the different payment modes those are taken? So either it can be through a payment card, normally paid through a debit card because of the high cost of loan. Then it can be through a account transfer, as in your net banking, transferring to the lender's account from borrower's account. It can be through your wallet debits. It can be through your biller payment, that you would have registered your lender as a biller in your net banking and you make the payment against that. And it can be also as a UPI payment, taking the help of your UPI framework in any borrower's bank. So how the process works? So for this, borrower would have already registered the lender as a biller or a pay. So biller in case of your biller payments and registered pay in case of your account transfer and other things, right? So borrower should have already registered lender as a biller and pay. Now borrower would select the payment mode as a second step. So in the same way, either it can come through a lender app or payment service provider can also be involved here, or it can be also done in branch. Now as a step 3, the borrower would complete the payment. Borrower's bank would authorize the payment, that the money has to go from borrower's bank to lender's bank, and then it would process the settlement as process number 5, keeping in terms of same interbank, nostro and vostro processing. I'll cover about this nostro and vostro processing in a separate video because this is a huge topic of discussion. But at this point of time, for simplicity, you understand that as per the interbank rules and regulations of processing these payments and all, that is settled. As and when the amount is settled from borrower's bank, lender's bank would receive the fund. So here, because there are no dues are generated, some cases the borrower would have requested the lender that okay, I am going to make a payment, and then you raise a due and or you raise a request and I'll make a payment against that request. Remember that this is not a due, right? So this goes straight away to the loan account balance. As and when we make a payment, as per the terms and condition, if it is a prepayment, normally it always goes to your principal. Your accrued interest is not touched. And if it is a foreclosure, whatever would be the accrued interest at that point of time, that is also made due, and it is also collected as a portion of the total foreclosure amount. So this is one of the scenarios of the payments, how the borrower makes a payment to the lender without any due. I hope you would have liked my video. Thanks a lot for watching my videos, viewers.